All of this at a time when we hear that our middle class is shrinking to levels, well, we've never seen, at least since we've been keeping track of these numbers. They've lost 30% of their wealth as a percentage of the population. They are now a minority, under 50%, when they used to be as high as north of 60% back in the 1970s. Joe Lestingi on that, Jonathan Hoenig on that, and what they make of it. Jonathan, what do you make of it?
Well, Neil, it's disturbing. I mean, the middle class is a country's energy. It's its lifeblood. It's really its independent spirit. And what created the middle class in America was capitalism. And it was the 19th century free economy that created the jobs, the wealth, the consumerism that has helped buoy and that has essentially created American capitalism and created American middle class. So as we've seen the economy become less free over the last few decades, and let's say 10 years in particular, we've seen the middle class shrink, and that's what's continuing to this day.
And we should show it. That chart might be a little difficult to read for some of you back at home, but bottom line is the middle class has grown in the aggregate, but as a percentage of the overall population, it is now a smaller part. The makeup of the difference, and Joe, you know this better than anyone, is then we've seen the very rich rise, and we've seen more poor rise, and that's shoved the middle class down the ladder here. But how bad is this, do you think?
Well, unfortunately, this is a trend that's been growing since the 70s, and that's the worst part of this. As we look over the history of the economic sort of health of our economy, the middle class continues to shrink, and the upper classes continue to grow, and the poor get poorer. So it's a narrative every politician loves to talk about, but no one has brought a solution to yet. And the biggest indicator we've had in recent time is the Great Recession. The Great Recession, a lot of families in the middle class took a big hit. Not only was their primary asset, their home, devalued, but their mortgage was then upside down on them, which really hurt their income value. So as we begin to recover, those guys begin to get their assets back and their wealth back, but it's not nearly at the rate they need to be.
Well, indeed, Neil, to Joe's point, I mean,
go ahead, John.
Well, and the solutions are always the cause of the problem. The solutions for supposedly fixing the middle class is always more redistribution, and it's across the board. Whether it's the Federal Reserve, which redistributes money, of course, to the very wealthy through the asset markets, or something as benign as the minimum wage, which keeps young people and keeps low-skilled people from actually starting to build that wealth to move in and out of the middle class. So the more we do to intervene, so it's only economic freedom that can begin to once again maintain and even build from here the middle class in this country.
I couldn't disagree with you more. There are two big indicators that we need to be looking at here. Number one is during the deregulations in the early 80s of the financial markets is when we saw massive declines in the middle class. And then number two, the only groups that really weathered the storm with the Great Recession were older Americans, so 65 plus, who had safety nets like Social Security and Medicare, two things that help protect them from having catastrophic failures. Then we also look at the younger groups that aren't invested in those programs, and they got hit the hardest. There is something to be said, and it is pointed out in the study, that government programs can provide a safety net that do work.
But it's gotten worse for the middle class, right? But are you saying that without the government it would be even worse?
Yes, for people over the age of 65 who would be harder to find jobs.
I'm talking about the middle class in the aggregate.
Oh, in the aggregate, absolutely. Without some safety nets in place, there was nothing that they would fall further.
The strongest period of economic growth, Neil, for everyone in this country, particularly that so-called middle class, was before any of these so-called safety nets were enacted. It was during that golden glorious age of the 1800s. I mean, that's what created this notion of wealth, consumerism, what we know as being the middle class. And this notion that deregulation somehow killed the middle class. I wish the financial markets, I wish the economy has been deregulated. It's become more regulated since the 1970s, and that's why the disparity continues to grow.
All right, guys, I wish we had more time, but you both espoused your points brilliantly, and that doesn't surprise me one bit. Thank you very, very much. By the way, I've been